Many Americans will be happy to close the books on 2009. Unemployment is just one of the reasons. It is at its highest level in 26 years. Now, our next guest said things will be better soon. RBS Securities chief economist Stanley is predicting the U.S. economy will add 10,000 jobs this month alone. By that, we mean January. He is with us now from his office in Stamford, Connecticut. Stephen, always glad to speak with you. Where is the job growth going to come from?
Right. Well, I'll tell you, I mean, one place that we're starting to see job growth now is in the temp category, and that makes a lot of sense because firms are still very cautious, but they have a need for workers. They laid off so many workers during the recession that they're very lean, and as a result, they don't want to just pile back in and permanently add to the payroll just yet. But they're starting, we're starting to see a lot of activity with a lot of the placement agencies.
Stephen, I don't want to be obviously greedy. That is to say, just stopping job losses is probably a good enough sign at this point. You're even talking about growth, at least with temp workers. But how long does it take before we see real significant job growth and not just temporary?
Right. Well, I mean, I think that's a big question that economists are in some disagreement on right now. And it really, at the end of the day, I think it depends on how fast the economy grows. I mean, a lot of people think we're going to have a subpar recovery. Our view is that growth is going to be quite a bit stronger than what a lot of people look for. We think that growth could be as strong as 4% next year. And if we get growth like that, then I think certainly by the middle of the year and into the second half of the year, we're going to see very solid job growth. So yeah, right now we're just bottoming out, but I think it shouldn't take too long until we start to see pretty healthy job gains.
Stephen, obviously, if you do get a positive jobs number next week, a lot of focus will be paid to that. What about how the Fed will view that? Is there any difference in the Fed's thinking if you have a modestly positive jobs number versus a number that's still negative?
Right. Well, I mean, at the end of the day, for the Fed to be satisfied, we're going to have healthy job growth. So, we saw that in terms of, kind of activating the tightening cycle, if you want to think of it in those terms, going back to 1994 and to 2004. One of the key things that pushed the Fed into moving was, a series of strong monthly job gains. So, plus 10 versus 0 versus minus 10 really doesn't make a big difference. What the Fed needs to see is it needs to see very healthy job growth, which I would define as probably, in excess of 150,000 a month, and they probably need to see it for more than just 1 month, more like 2 or 3.
Stephen, you're a little bit ahead of your peer group, if you like, as far as the aggressiveness that you think the Fed is going to make a stand. You say we're going to at least hear language about tightening before the summer. Is that right?
Yeah, in fact, we think the first rate hike is probably going to take place at the middle of the year, at the late June meeting. And that's a function of a couple things. As I mentioned before, we've got a stronger than consensus forecast for growth and, as a result, for employment. And I think, secondly, and perhaps more importantly from the Fed's perspective, we also think that core inflation is going to start to tick up a little bit next year. And that's a really key distinction because most of the policymakers at the Fed seem to be of the belief that as long as there's an output gap, inflation should be decelerating. And if you have that mindset, then no matter how fast growth is, as long as you think there's a lot of slack, you think inflation's going to be benign and you're feeling like you're on hold. And I think that's where a lot of folks at the Fed are right now. So,
Stephen,
yes,
we have to leave it there.
Okay.
We thank you for your input. Wish you a happy new year.